Hey all, good morning and welcome to ShareTrek. This is Raj here. Today we have just a few news articles, and our focus is going to be on the technical analysis side because I don't see there is any news that's going to make any difference to the market at this point of time. So let's get started. Welcome back, friends. Today, the IMF has come out against the British tax cuts and said quite bluntly that the new economic measures laid out by the UK government will likely increase inequality, and that the IMF does not recommend large and untargeted fiscal packages at this juncture. Meanwhile, the S&P says UK is already in a recession, and with inflation running at 10%, it expects the Bank of England to increase interest rates further to control the inflation. The fiscal package from the government seems to be responding to the recession, while the central bank is focused on the inflation and raising its interest rates. This is hilarious, if not tragic. This will only prolong the agony, and I wish that the government had not done any tax cuts at this point of time, but we'll see what happens. Maybe there are new lessons to learn. The US housing market deserves a mention, as the mortgage rate for 30-year fixed has gone up to 6.25%, with application to refinance homes ending up being 84% lower than the same time last year. So that's a big deterioration out there. This statistics is likely to get worse as the quantitative tightening progresses and less mortgage-backed securities are renewed by the Fed. This also means that homes will stay on the market longer and will sell much lower than list price. And also it means that when it comes to the closing, there is always a gap between when you sign an agreement for purchase and when the closing takes place. It's typically 1 month to 3 months time. During that time, if there is an interest rate hike and some purchasers disqualify due to their financial status, then there would be a few deals that may fall apart, and the property may come back into the market at a much lower price. This can lead to further drop in discretionary spending because home equity line of credits will be stressed out, and that can add to the deflationary pressures that we will see. So with that said, I think that there is no major news item that is positive at this point of time, which can help us to look forward to some improvements in the market. All the pre-market action seems to be red. So let's look at the TradingView platform and spend a little more time on analyzing the Nasdaq and the indices. So let's do that now. Welcome back, friends. So here we are in our TradingView platform, and I'm looking at Nasdaq futures out here. Each of these candles are a one-day candle out here, and we are still in the bear channel. As you can see, the bear channel is extending further. There seems to be no end in sight, but fortunately for us, we are hovering very close to the upper bounds of the bear channel. So hopefully one of these days we are able to break through this and come out. MACD is absolutely bearish, and momentum is at the rock bottom at this point of time. And pre-market, we are already down 0.88%. It's around 7:45 a.m. right now. Things can change between now and market open, but that's what it looks like right now, a bearish open. Futures already down 0.96%. Let's go to the indicators. US oil is up 1.05%, but it's not much. It's still in a bear channel. I'm going to mark this green line as a red one so that it can show that it's a resistance. MACD is bearish. Momentum is below average. It's picking up, but it's not that strong at this point of time. If you look at QQQ, we are still in the large bear channel and we are coming down. There is a good chance that we may have a double bottom opportunity here if we fall down a little further. If that happens, there is a chance that we can probably bounce back up again. But for that, I think we'll have to wait for tomorrow, or maybe today itself it could happen, because you can see the pre-market pricing it as is at 271.63, which is somewhere out here. And 271.63 somewhere out here, and therefore I think we may probably test the double bottom theory today. If we bounce back due to double bottom, then it can happen somewhere around 9:30 or 10 in the morning, I hope, and we start testing the resistance out here, which is going to be at 278.43. Right now the MACD is bearish, and also the momentum is almost at 30%. Typically when we touch the 30% bottom, we always bounce back up, but we also have the case, as I mentioned before, of 26th of January 2022, when we had touched 24.02. Right now we are at 30. So I think there is a possibility that we can fall down further and the double bottom may not materialize. So both possibilities are there. That said, let's look at S&P 500. S&P 500 is also dropping as it falls within a bear channel that you can see out here. Our next support is going to be at 358.47. Right now we are at 361. We have dropped 0.65% from yesterday in the pre-market action, and here we are already below 30%. We are actually at 27.23, and as far back as 27th of January 2020, 26th of January 2022, we had touched 25.06. So we have another potentially 1 point to go. So if we drop another 1 point or so, we'll be coming close to where we were here. I'm just going to put a straight line out here so that we can see how far away we are. So this is our support when it comes to the momentum and RSI. This is going to be our support. We can potentially bounce off this, which means that this particular line and this particular line of support might be in tandem, and most probably than not, we are going to bounce off from 358.47. Let us look at Russell Index. Russell Index is down 0.21% pre-market, and we are already below 30%. Again, here I'm going to draw one more line out here just to show the different levels to which we can potentially drop. One here. So these are the two lines of support that are available for us in the RSI momentum chart, and we could potentially bounce back from there. And in the price chart, we have support at 159.93. And if you look at Dow Jones Industrial Average, we are already fallen way below where we had been in the past. So Dow Jones is most likely to rebound today. It's down minus 0.50% pre-market, and it's very close to 285.74, which is the next support that we have. And I think Dow Jones might most probably be the first one to bounce back, given that its momentum has fallen so much. Now let's look at the VIX. VIX is already up. It started higher in the morning, and it hit a resistance at 34.75, and then it came back down again. So this could be the double top, and maybe we are going to come down. That's also a possibility. Let us see what happens when the market opens. Right now MACD is bullish and momentum is already overbought. This overbought indicates that we are going to come down again. Whether we are going to bounce off this support at 33.77 is a big question. It will all become clear as the market opens. If you look at the US dollar index has already gone past this diagonal line of support resistance, and it's now becoming a diagonal line of support, and US dollar index is forging up further. MACD is bullish and momentum is way overbought, and I think we got to see the RSI cool down out here. It's overbought, and I think there should be a sideward movement of the US dollar index, or at least staying static where it is. That's what I expect, and I think that we might fall back below this line of support before the end of the day for the US dollar. That said, I'm going to look at the index movers, or market movers as I call them. Microsoft is down 0.69% pre-market. Google is down 1.11% pre-market. And if I was to look at what else do we have here? Amazon, where is my Amazon? Amazon is down 1.35% pre-market, and Apple is down 3.85% pre-market. So if you were to look at Microsoft, for example, the momentum and RSI is already very weak. It's already below 30%. If you look at Google, it's also below 30%. If you look at Amazon, Amazon is not yet below, and Apple is way above the 30%. So Apple and Amazon have to drop in order for the indices to reach the bottom. And at this point of time, what has happened is that other components of the index have fallen significantly. So they are likely to consolidate and they are likely to move up, while Apple and Amazon are going to go down and bring the index down with them. So we'll find the index moving in a sideward movement, as the fall in Apple is balanced by the consolidation or the raise in other shares that constitute the index. So we're going to be in a consolidation movement. That's what seems to be happening in case of Apple. It's consolidating a little bit. It has to fall for us to reach the bottom, in my opinion. So we'll have to watch Apple and Nasdaq closely going forward to see what happens with the market. I think once they reach the bottom, then we'll be in a position to look forward to moving up in the index. Now let's look at commodities. Wheat is down 0.87%, and copper is down 0.38. All of them are pointing towards a cooling economy. Genomic stocks, I'm going to just sort them out. We have Verve at the very top. I still don't understand what is the attraction for Verve. I think ARK Invest has stopped buying Verve. They are saturated with it. I don't understand why Verve is bouncing up so much. I'll do a study on Verve and probably come up with a video to talk about what's happening with Verve. Bluebird is up 5.62 pre-market. It's down 1.65%. Verve has got no trades pre-market. SQZ Biotech is up 5.43% as of yesterday, but no trades pre-market. CRISPR Therapeutics is down 1.54% pre-market. Editas is up 4.01 as of yesterday, no trades pre-market. Beam has no trades pre-market. Caribou Biosciences has no trade pre-markets. Allogene has no trade pre-market. Intelia has no trade pre-market. DNA is up 0.35% pre-market. IMTX has no trade pre-market. PACB is down 0.57 pre-market. IDNA has no trade pre-market. ARCG has no trade pre-market. Illumina is up 1.69% pre-market. Teladoc is down 1.39% pre-market. Invitae is down 1.69% pre-market. In balance, I think that the whole market is bearish, and we are going to see more of red in the markets. Of course, they may be a bit choppy because apart from Apple and Amazon, most of the stocks have fallen a lot. So they are likely to recover a little bit. We'll see a bit of greens, but until Apple and Amazon fall down to the bottom, I don't think we can call the bottom of the index. So we should see choppy trades in the market. The shares that we track may fluctuate between green and red, but overall the trend is downwards because we are in a bear market and we are just going to go down further. I think there is opportunity to place a few calls provided that your purchase price is still lower than what the market price is right now, or at least equal to the market price. It's a risky gambit, but in some stocks that is a possibility. As far as the overall investment portfolio is considered, I think that I would look at high dividend paying companies with strong businesses and diversified businesses for picking up at this point of time pretty cheap, with the intention of holding it for the next 2 to 3 years, because it's going to get a lot of capital gains, and while you're holding it, it will continue to give you dividends. Some of the companies that come to mind for me are banks. Banks typically do better when interest rates go up. And also I am thinking of Berkshire Hathaway, I'm thinking of Apple, Amazon, I'm thinking of companies like Microsoft and Google. These are all solid companies. They are coming at a very, very low multiple at this point of time. And I think with Apple and Amazon, I look forward to a further fall in the prices for dollar cost averaging. These will all stand in good stead looking at a 2 to 3 year time horizon, because this depression or recession or whatever we call it is not going to last more than 12 months. Things are going to get better sooner rather than later, because inherently people are risk taking, and sooner or later many entrepreneurs will start taking risk and generating employment and other things, and the market will come back up after being blown down totally. So that's my opinion. Friends, our morning show has not done very well yesterday, and also yesterday's video on a private company didn't do well. So the two lessons I'm taking from this is that our viewer is not much interested in the morning show or the technical analysis or the news item, because obviously you're getting that from elsewhere. So I'm thinking of discontinuing the morning show going forward. As far as the videos are concerned, I think that our community is not interested in private companies which are doing genetic research and coming up with a revolutionary treatment for genetic diseases. So I did a profile of Exion yesterday, which is a very promising company, but it's private. So I'm taking the lessons that the community wants me to focus more on listed companies that are doing genomic research and coming up with therapies. That's where your interests lie. You're more interested in CRISPR therapeutics, and you're not much interested in the technical analysis and the daily news, because you're getting it from other sources anyway. So with that in mind, I'm going to discontinue the daily show from the end of this week. I'm going to do for the next few days while you put your comments below. Let me know if you want me to continue the morning show or the daily show, as I call it, and also whether you want me to stop covering private companies that are doing pioneering research in gene therapies for difficult to cure diseases. So please let me know with your comments below. I'm going to maintain status quo for the next few days until the end of this week. And based on what I hear from you, next week we'll potentially see the discontinuation of the morning show and just focus on genomic companies and special videos just on genomic companies and what's happening with their platforms or with their finances or with their collaborations and things like that. So friends, I'm looking forward to your feedback. Please put it in the comment below. And if you like this video, please press a like out there. And if you're not yet subscribed, please subscribe and help us grow this channel. Thanks and have a great day. Bye for now.